Aloha Friday, everybody. Skyler here with you as always with my brother Chad.
What's up, Skyler Stokes?
Hey
How you doing,
Chad.
bro?
You had some glasses on a little bit ago. It's
My
awesome.
computer screen glasses.
I love it.
I
Blue,
don't,
the blue light
you gotta
blocking.
filter out the blue light, man. You don't
Yeah.
want that stuff getting into your eyes too much, especially late at night, Skyler. If
Yeah.
you look at the screen a lot, it's important. So,
Oh yeah.
yeah, man.
What's been
How about
happening?
you?
I know this well, let's see. I think we took like a month hiatus, but there's good reason for it. Real estate market's been on fire. You are super busy. Tell everybody out there what's been happening on your end. How many houses have you or how many clients have you helped get in or out of their properties, and what are you seeing here in the next 3 months?
That's a good question. I have been trying to get a lot of buyers into properties, and for those real estate professionals out there in my network that will see this video will know that it's pretty close to, I don't want to say impossible, but it's tough to get buyers into properties right now. The reason being because there's just been an absolute feeding frenzy on real estate the last few months, really, since the beginning of this pandemic, almost maybe the middle of it. So the last 6 months or so has been crazy, especially the last 3 months here. Super low inventory. The interest rates were really low. They're starting to creep back up. They're now back up to three plus, where they were at like 2.5 not that long ago. So I'm not sure people are going to see anything with a two in front of it ever again. I got a guy locked in this week. He had to buy down his rate to 2.875. So we're still seeing a little bit of it, but for the most part, it's going to be, three on up from here on out. So anybody that got an interest rate in the twos, they were pretty psyched. So those people were out and about and trying to buy houses. And the reason I say it's difficult is because the inventory is so low. We've just seen so many offers on every single house. I was trying to represent some buyers, and there were 36 offers over the weekend. And
Wow.
like, I don't know, who knows how many showings, probably 75 showings. So, fortunate. So that's sort of what's been happening on the buy side. I have been fortunate enough to get a couple buyers going, but it's been difficult. And a lot of people have been losing out. The people that are winning are paying way above list price, way, way above list price. They're waiving their appraisal contingencies because it's just gone that far up in the recent months. And that's what you have to do to get it done. And even then, you do have to have a lot of cash on hand typically to get your offer considered. So, a lot of the 10% down, normal buyers, conventional loans, 10% down, let's say 15% down, even 20% down aren't even getting considered, because most of the time the people with the most cash willing to pay the most are going to blow everyone else out of the water. So
Dude,
that's,
actually, yeah,
go
yeah,
ahead.
it sounds crazy. So there's actually two things that you mentioned in there that I want to shine some light on, or at least kind of get your thoughts on. I imagine that because interest rates are kind of creeping back up a little bit, it's only going to create even more of a desire, or like this need to get into real estate, because it's like, well, everything kind of bottomed out, and now that it's starting to rise back up or come back up, you may lose out on some of these opportunities as far as the cheap money, or the cheap
Right.
loans. So I can only imagine, like, in the next 6 months, 12 months, it's probably going to continue to be pretty exciting, in the real estate market. So
I think so. And I think the rates are still at a historical low. But I also think what's going to happen are people are going to see their neighbors getting these ridiculous prices for their homes, which is what's been happening over the last 3 or 4 months. And they're going, wait, John and Sally next door got, $100,000 over a list price for their home. Maybe we should sell ours. And now I'm starting to see that happen. So maybe we're going to see a little bit of an uptick in inventory, and maybe that will level out the playing field for everybody, and for buyers. So that's sort of what I think will happen. I don't know how soon that will happen, but for now, it's definitely still in the seller's favor. So that brings me to my next point, is that fortunately for me, I do get a lot of seller representation, and listings. So if you don't get listings right now, you're kind of shit out of luck,
mhm.
because it's like I said, it's difficult to represent buyers. So The listings I've gotten this year so far have all had multiple offers, every single one. Even the higher price stuff, the one I had in Fire Mountain, we had
Yeah.
7 offers, and that was only after being on the market for 3 days. If we would have had let it sit on the market another 3, 4, or 5 days, we probably would have had 14 offers.
Mhm.
That one sold for over $150,000 over list price. So,
Kidding me?
and then even the smaller ones, I've got a condo that just came on in Solana Beach. That one already has an offer, a blind offer on the table, way above list price. I'm putting another one on in Mount Helix in the next couple days. I will assume that one will also have offers way above list price. So that's just what you got to do to get in. And there's a sudden rush of buyers wanting to get into something and get into the market, which is great for sellers.
Right.
So,
Yeah.
and again, if you are a buyer and you're in that position, I think the best thing to do is like I always say, it's got to be a 6-year hold, an 8-year hold, a 10-year hold minimum to just make sure your investment is safe. So
Yeah. Yeah.
it's been a wild ride, but it's good. And for people that, like I said, as far as agents are concerned and brokers, people that are getting listings are on fire. And if you strictly represent buyers, it's a tough time for you. So, take that for what it's worth. But I think we're going to see the playing field level out here pretty soon, and get a little bit easier as inventory starts to come up. But with that, interest rates are coming up. So
Right. Right.
it's always doing this.
Yeah. Yeah. It is a very interesting um, seesaw battle right now. I think with not just interest rates, but the market, the stock market and everything else too. So
Yeah.
it's pretty exciting. Dude, share really quickly. Share with people how many I guess deals that you've completed this year or have in the pipeline right now.
Gosh, this year, actually not as many as I should be on par for this year, but still good. What is it, March? I think I'm on number 6 or 7.
That's
Uh,
amazing, man. Like that's
six,
crazy.
but 6 pending with 2 more coming on, or
Mhm.
6 either closed or pending or about to close with 2 more coming on. So yeah, I mean it's steady. The beginning of the year was started off for me was a little slow in January, which is sort of expected sometimes. Usually I always say, no, don't worry about that. And it was a little bit slower than I was expecting, but then it just kind of picked right up from there, and
Mhm.
back up. February and March are fine. And even coming to April, it's going to be even better. So 2 pending, 2 active, or 1 active, 1 coming on like tomorrow, and then 2 before that. So that's 6 so far. Not crazy, but definitely good. And
Yeah.
I think if I can close 6 in the first quarter, that'll be good. That's a pretty good number. So it's gonna be like this for a while. Like you said, I think the rest of the year we'll see that going on. And then into your world, I've been exploring a lot more investments in the market. I've been playing around with more crypto. I bought some more Bitcoin. I maxed out my SEP this year. So I think for people that are fortunate enough to be earning a good income right now, maybe I can turn it. This is a good time to turn it over to you and say,
Mhm.
like, what are you seeing people that do have excess funds right now and are looking to put them somewhere other than their checking or savings account?
Mhm.
What are you seeing people doing?
You know, I think a lot of it, at least what I tell people is it really comes down to what your short-term and long-term goals are. If you're planning on needing that money in the short term to buy a house, $150,000 over asking, then it's a good idea to kind of put it in some sort of high yield checking account or savings account. You can find those like they have a couple online ones which are pretty cool. So like Marcus by Goldman Sachs. I think that they have an interest rate right now for savings at like 60.6% versus what you would have at a normal bank, which is like 0.0. 6%. So there's some opportunity as far as like, finding some short-term savings yields, I guess to speak, at some of these online savings accounts.
Right.
um, for those people that are like, I'm pretty set. I don't really have, the need for a lot of this cash in the near term. It's okay. Well, our why don't we try and look at some sort of way in which you can deduct that from your income and put it into a retirement account or retirement plan.
Right.
Generally, when people like to do that, there's a number of different options. If you're like a real estate agent, you're your own company, your own business. I like to say, utilize a tax code to your advantage. You can stash away up to 19,500 personally from your W-2 income. A if you're under 50, that jumps up to 26,000 if you're over 50. And then from the corporation, you can also put up to 38,500 into your plan as a company contribution. So overall, if you are a single person, um, who you're your own agent and you are making a good amount of money and you want to stash some of it away, it's called a 401k with the profit sharing plan attached to it.
Mhm.
58,500 you can deduct from your income for the year. So W-2 and corporate earnings. So a lot of opportunity there. There's other things that you can do too. There's like cash balance plans. There's all sorts of other retirement accounts. At the end of the day, though, I think if you're making a lot, an IRA is really limiting to putting some money away because you're only allowed 6,000 if you're under 50, 7,000 if you're over 50. So I just say, if that's the case, find a financial planner and or an investment advisor that can kind of help set that up and start saving some money. You can do it, really quickly and really easily. So that's what I would say from a retirement plan standpoint. I think if we're moving into the markets, which is actually a good segue here,
Yeah. Let's
the
talk about that. Let's
yeah
talk about that, Skyler.
yeah
The market.
it's like I would say very much like the San Diego real estate market. Um, the stock market there's a feeding frenzy going on right now. I
Mhm.
think we have to kind of take this in the context though, because a lot of people see the S&P 500 or the Nasdaq or the Dow, these major indices, and they continue to kind of go up. A lot of that, like we've talked about before in previous episodes, is predicated on the the tech sector and some of these really big technology companies, and consumer goods companies. So like the Amazons, the Netflix, the Googles, the Facebooks, the Microsofts, those make up a huge portion of those indices. So when these, when these indices are continuing to go up, it's like everyone wants to get in because they think the stock market's doing really well. Well, in reality, it could just be a few stocks, right? So I tend to say, let's just look at the whole picture. Let's not base our entire portfolio or our goals off of what you're seeing in the news as far as these indices are concerned. Have a balanced portfolio, a diversified portfolio, and find some opportunities in some different sectors. I think Liz Ann Saunders, who's the chief, let's see, what is she? She's some head honcho over at Schwab, and she was just recently on a podcast on Morningstar, and she was saying that international based developed markets and emerging markets are a good place to look as far as some opportunity moving forward. The stock market is cyclical, and and uh and what happens,
I was trying to look her up when you were saying
yeah,
that.
yeah, she's brilliant, man. Like she's one of the smartest people that I follow, I think, on social.
Okay.
But what she was saying was, and this is just, I think, standard when it comes to financial planning and investment knowledge and that kind of thing, markets are cyclical. So every like 10 years or so, there'll be a switch or a transition from these heavily growth oriented stocks like the Googles, the Amazons, those sorts of things, into more value-based companies. And sometimes those actually end up going into the international markets too. So right now we're seeing kind of like, I think in the last month or so, we've kind of seen some kind of puttering with the market. It's been up and then down, some volatility. Meanwhile, overseas and developed markets, they're really doing well. So I think towards the, as we look to the future, it obviously isn't going to be something where it's like throw all your money in there. Like that's not what I'm saying. I'm saying just look at it from an opportunistic point of view. Maybe put some of your portfolio in there, or some of the assets that you have in there, and then just have a diversified portfolio. So yeah, I think moving forward, the market is probably going to continue to have some sort of volatility. It probably is going to continue to go up, just based off of the economics, and the just overall, country and society opening back up again, to full capacity. Like the other day, Texas decided that they were going to open everything up this upcoming week. So, and then I think California followed. So if that happens, it's just going to, further the recovery from an economic standpoint.
More people are going to be out. More people are going to be spending money again, going out to dinners, going out to shows, going on vacation if they can travel. Yeah, so I think we're going to see a lot of greenbacks coming out of pockets and going back into the economy over the next couple months for sure.
Totally. Yeah, I agree, man. I think this 2021 is probably going to be a little bit more of a volatile year rather than last year, which was basically like one dip and then up ever since. We're probably going to see some more puttering along this year, but yeah, I think there's still a lot of opportunity in the market. It's just a matter of finding the right sector and then taking all the information that is coming out of, the economy opening back up and then making decisions based off of that. So that's my take, man. I think couple that with some retirement planning strategies and savings for, income and that sort of thing for folks like yourself, real estate agents and everything else. Yeah, it's I think it'll be a good solid year for a lot of people who have the opportunity and are blessed to continue to, work and make some money. So
awesome. Well,
yeah,
I think that's perfect way to wrap up.
Yep.
An amazing Friday. Any advice for people going into the weekend? What's the weather going to be like? Maybe practice some extra aloha this weekend.
Yeah, let's see. My advice for the weekend would be to help someone. Let's see, how do I say this? Just do something kind for someone that they didn't expect, I guess. Like open a door for someone, or help auntie out with their groceries or something like that. Like just be cool. Man. Yeah, just spread more alohas. Just be cool, man. Just be cool, bro. Just be cool.
You know what? Let's get Mark Datnow on here next week to touch back on rates and mortgages. I think it'd be a good time to circle back with him and get him on here with what's going on, because with the rates going up, I get a lot of phone calls. So we will answer that for everybody next week.
Sounds perfect. Let's do it. Mark, you're on next weekend, bro. Next week.
Yeah, Mark, get ready, brother.
All right, dude. Thanks, guys. Happy Aloha Friday.